How you doing, guys? Welcome back. In today's short video, I'm going to be discussing how we can use high impact news events to give us a range to start paying attention to before we consider entering the market. So as you can see here, this is the micro ES 15-minute chart. News just hit and we can see a big strong 15-minute candle to the downside. So what I like to do is I wait. I'm very patient, and this is a very simple but effective way to give yourself time to be patient, to wait for those opportunities, wait for these ranges to be traded through. And then the context behind that will give you an indication as to whether or not you're on the right side or the wrong side of things, right? Now, before I get into that, one of the things that a lot of people do is when high impact news events or, releases, FOMC, non-farm payrolls, these types of things, and you see these big explosive moves, a lot of people want to just immediately get into the market. So they see red, they want to short, they see green, they want to buy. And what happens is you get a lot of this back and forth, back and forth, back and forth, right? If we drop down to the lower time frames, we see candles all over the place, right? That type of volatility can be very, very dangerous, and it can decimate your account very quickly. So what we want to do is we want to define a range and say, look, I don't want to do anything until price is outside of that range. Now, this candle has effectively created a range for us to start paying attention to, right? We've got this level up here, all right, which is the 41.74, and then we've got this level down here, which is 41.39. I say to myself, I can't do anything until price comes outside of that range. Now we know there's a pretty big explosive move here. There's going to be an area down here where price may want to be driving into if it breaks this low. But on the upside, as we've had some very, very strong movement, we can see over here on the 4-hour chart, we can see on the hourly chart, it's really, really nice, sort of uptrend on the S&P recently. But the principle remains the same. If price starts to reverse because price is going up, I'm more likely to favor a long trade if it breaks above this level and starts to show some indication it wants to start going higher. Now, if it does do that, and the way in which it does that will give me a much better indication and confidence to start paying attention to the long side. And then as price goes up, it's reversing this. Then we can start to look at the narrative, what just happened. Maybe it was a stop run, maybe price just went down there to trap traders short, and so on and so on. And we're looking for these very small, subtle nuances to get us into the market, and doing it patiently and on the right side of the market, as opposed to just jumping in haphazardly just because we see red or green. So I hope this video helps. I'm going to be posting a lot more of these very short, informational, basic, simple strategies, to keep you safe in the market. And I hope everyone's having an absolutely fantastic day, and I will speak to you very soon. All the best. Ciao for now.